This is your quarterly property update with Tyler and Sophie, and we're here to bring you the pulse behind the property market from March through to June.
Let's not sugarcoat it. The last few months have delivered mixed signals, with national headlines being dramatic, but the Gold Coast, it continues to do what it does best. Hold strong, adapt quickly, and attract lifestyle-like buyers.
Now is not the time to be distracted by media noise. As the Gold Coast isn't a copy-paste market, it moves to its own rhythm, fueled by lifestyle appeal, migration, and sheer demand for coastal living.
Australia's property market has now gone global, with Sydney, Brisbane, Melbourne, Adelaide and the Gold Coast now ranked among the top 10 most least affordable and expensive places to live in the world.
Our GC has now surged ahead to be Australia's second most expensive market, just behind Sydney. Medium house prices have hit 1.17 and the annual growth rate is between 9 and 13%. In fact, it is the fastest growing market in Australia.
What's fueling all of this? It's a perfect mix. A flood of interstate buyers, limited land supply, infrastructure upgrades like the light rail, and of course, low supply and high demand is driving our market upwards.
The Gold Coast has now overtaken Melbourne for our go-to market, driven by the lasting pandemic shifts. People are still chasing down more land, that lifestyle appeal. They're looking at Queensland's tax advantages and a booming job market, making it the place to be.
On top of that, suburbs like Willowvale, Ormo and Yatala have seen upwards of a 13% property increase in the last quarter. More buyers are now chasing the property inland for that lifestyle appeal.
It's now time to recognise that the Gold Coast isn't just a holiday spot anymore. It's now Australia's hottest market and a prime investment destination.
The RBA held the cash rate steady this quarter, but the sentiment has shifted. Early in the year, buyers tapped the brakes, cautious of our previous cash rate hikes, but now buyers are pre-approved, ready to go and are committing to contract.
Lenders are now offering fixed-term competitive rates, especially for owner-occupiers. And for the first time, first homeowners are back in the mix, with a little bit of help from the low deposit schemes and, of course, parental equity. That is, of course, if they can find a property suitable for them within their price bracket.
Recent data shows our most active sellers are our homeowners coming off fixed-rate terms, locking in the low interest rates and seizing the opportunity to leverage the market.
From March through till May, listing volumes stayed tight. This is largely driven by the homeowner sector that is sitting on record equity and, of course, low interest fixed rates. Therefore, there's no real need to sell. However, it's creating what we're calling a soft shortage. It's not a boom, it's not a crash, it's just a steady undersupply of listings that are keeping competition high and extremely competitive for buyers.
By mid-June, things shifted quickly. A noticeable increase in our market, rare for this time of the year, driven by upsizes and downsizes taking advantage of the market opportunities presented.
For those of you who took our advice and listed with us after our last quarterly report, we've got good news. A large portion of our June sales saw multiple offers straight after our first inspections. In some cases, we recorded 10 to 15 multiple offers on each individual property and saw 150,000 above comparable sales within the area.
Right now, our most competitive price bracket is our well-presented family homes. Think pools, side access, granny flat extensions, landscaping and yard space. All of these lifestyle properties selling under 1.5 million a hot property.
What's interesting, cash buyers are frequently falling short. Tyler and I have analysed our trends, and what we're seeing is auction-ready buyers are consistently coming in third when it comes to price. This is proving that private sale treaties with flexible terms are your strongest bet, and that sellers should steer clear of auction formats in our area if they're looking to achieve the best result.
As always, our goal is to align our sellers with the best potential selling terms. Timing can become your biggest hurdle but your greatest ally. Getting ahead of potential listing surges means capitalising on low supply and high demand and leveraging the market for your best possible result.
Since March, medium sale prices have yet again recorded another 1.8% increase, which is a quiet win given broader economic caution.
Homeowners who purchased in the last 5 years are taking the opportunity now to cash in on quick equity gains and often inject themselves back into the market with high cash portion.
We're currently in a fluid market, one where conversation leads the way.
Not panic, not pressure, just genuine willingness from both sides of the party to get the deal done.
It's not frozen and it's not quite exploding. It's in motion. It's changing week on week, suburb to suburb. And with that movement becomes opportunity. Opportunity for owners that may be hesitant to sell due to low stock and, of course, market complexity.
But here's the twist. With more listings becomes a shift in the buyer's mindset. Buyers are becoming more selective, but not less motivated, just more particular. And when they find what they want, they're motivated and committed to getting the deal done, paying premium prices and negotiating with our sellers flexible on their terms.
We're seeing the terms of the sale become the tipping point and the catalyst of change when it comes to sellers. You've heard us say it before, extended settlements, leasebacks and subject to the sale of deals are all back on the table for the seller, especially for the right property. The highest bidder isn't always cash, it's the buyer who can meet the seller's terms.
Unlike the chaos of the COVID market where cash was king, buyers are now saying, how can I make this work instead of take it or leave it?
One of the biggest sellers' objections that we hear over the past year is, I don't want to sell because I don't have anywhere to go, which is fair. But with more listings that are coming online, there becomes more change, particularly in the lifestyle and family-friendly sector. The fear is now easing and the domino effect has kicked in. The more choice equals more movement.
The best part, this isn't an oversupply, it's a balanced stretch. Enough stock to create confidence and not chaos.
Buyers are chasing turnkey, move-in ready homes. Think problem-solving properties. We're looking for multi-generational living. We're chasing dual living incomes or simply move-in ready. With more eyes on our market internationally than ever before and backed by new government incentives, the market is set to stay strong.
So if you've been sitting on the sidelines thinking now's not the right time, there's not enough stock available or buyers are being too cautious, you honestly need to reframe your mindset.
We're in a phase where the high buyer demand meets negotiation-friendly attitudes, and the right property presented well and priced smartly will attract real demand and drive real attention and record prices with, of course, the right agent.
This window won't last forever. It's fast-paced and competitive.
What may seem to be quietly active to the outside eye is in fact a high-stakes and demanding market for buyers at the top that are offering flexibility to sellers' wants and needs.
This is an ideal market for those who prioritise structure and certainty.
So stay connected to your local market. These windows of opportunity are opening and closing fast, especially in niche suburbs.
Let's talk strategy, let's talk timing, and let's help you move forward with confidence and not chaos.